Alright, I'm out there. W day, bro. Fucking done in a couple minutes. What's up, YouTube? Today we're going to be going over one of the most underrated concepts in trading, which is SMT divergences. So before price reverses, it has to fall out of sync. Every single major expansion move or sell-off we see in the market starts with one thing, which is a crack in correlation. Now, we can see this play out every single day, and we'll go over a bunch of examples. But first, let's dive into the concept and logic behind what is exactly happening when an SMT is formed. So, SMT stands for Smart Money Tool, and basically, the entire market moves in sync until it doesn't. When one correlated index, like Nasdaq or the S&P 500, makes a higher high, while the other index that's correlated fails to, that's your first signal that correlation has been cracked. That desynchronization is the cause of all movement in the market. Now, price doesn't just reverse because of an, RSI divergence or a pattern you might see like an inverse fair value gap, right? Those are tools we can, use to gauge order flow, but ultimately price reverses because the system of correlation and delivery has gone out of balance. Now, when the market falls out of sync, it must replace to restore equilibrium, right? And that is what creates the reversal in price. Now, we can actually go ahead and jump into some examples here on the chart and some trades I have taken recently. So to begin with, you can use SMTs and quarterly SMTs to get your bias for high time frame reversals, right? So let's take this example from this week. On Tuesday, we put in this prominent high during New York session, and we see that we traded lower, okay? Now, we open up Wednesday right here, and you will see that going into Wednesday, we made an SMT divergence from the high made on Tuesday, okay? So this is going to be an SMT, a daily, quarterly SMT. Now, what does this actually tell us? Well, because we see this discorrelation between days, we can expect that we will see distribution phase lower on the following day, which is Thursday, okay? Now, you will see Thursday then comes up, takes this high, and we see distribution lower for the entire day. Now, for the same thing going the other direction would be an SMT like this at the lows. Now, you always want to be taking trades that are aligned with the bias, which is obvious, but right here, when you see we have manipulation of buy-side liquidity and we have an SMT divergence at the highs, we know price is not going to trade higher because we've already seen discorrelation and manipulation at these highs, and we know the draw is now lower. Now, if we had seen this SMT get put in at these lows, where maybe London traded lower and created our SMT at these lows, with the low that was created, we would then expect bullish delivery through this high for the following day. Okay, so now that you actually understand the logic behind SMT divergences, why they work, and how we can use them to find our bias, let's scale down into the lower time frame and see how we can use internal SMTs for entries. Now, just looking at Tuesday of this week, we see that off of market open right here, we have this accumulation, and then we have this manipulation of this high. Now you'll see right here that Nasdaq came and took out this high, while ES failed to come take out this high, okay? Now this correlation right here signifies to us that the draw is going to be the initial sell side that is resting nearby. So what do? Put in this SMT, close with this large wick, and we sell straight off into these lows, okay? Now, after taking out these lows, we make not only an internal SMT at this candle right here, where you see ES came and took out the low and made a higher high. We then make another internal SMT right here between these lows, as you will see right here, okay? So we now know that NQ is the leading asset off of this initial manipulation phase right here, because we have SMTs where NQ is making a higher high, okay? I then look for confirmation to see us trade above, these imbalances in price, which we then get right here. Okay, and as we close above this last down close candle, I'm looking for price to come back into this change in the state. So we see price comes back down into this change in the state. This was also our New York open price right here. And we see that when doing so, NQ takes out this low right here, and what does ES do? ES makes a higher high, okay? So this is our SMT right here. This is our cracking correlation. Now, when seeing this and when seeing this candle close and it's wicking above this level with this SMT, we can almost guarantee that the next candle will be a large distribution candle, as we see every time, right? This candle that closed here with this SMT, the next candles following were large distribution. SMT closed here, large distribution. SMT closed here, large distribution, okay? So I entered immediately off of this right here, 10-point stop. And what I did for my take profit was I took this swing low created to this last down close candle, template, standard deviation, and I targeted -2, okay? So right there, amazing trade. Now, when we see price trade into negative deviation, -2 deviation, we know that this is a level where price, tends to see reactions and trade lower, right? But that's a little bit vague, right? We need to see more context. Now, what we got was an SMT between this high and this high. And you will see right here, okay? ES comes up and ES sweeps this high right here, making this SMT. And NQ fails to take this high. Now, what does that make NQ? It makes it the leading asset to trade lower in this case because it's weaker, right? And we see imbalance in price, we see discorrelation, and we see clear rejection, and this trades lower for the rest of the day, okay? Now we can go ahead and jump into the trade that I took on Wednesday. Okay, so very similar thing, kind of going into market open on Wednesday. We had a clear draw right here, which was an unfilled 1 hour fair value gap. Okay, and while I was bullish on this day, I wanted to see that this fair value gap get mitigated off of open. Okay, so what I did was I took the swing high to the last swing low right here created before market open. Right there. Okay, now our market open candle is going to be right here, this large candle. And what we see is that this candle pushes higher. It trades into our 706 OTE range, and it takes out these resting highs. Now we see that off open, ES already began selling off. So we have this high right here, and you see that the 930 candle fails to take this high, and we begin to already displace lower. So seeing that NQ is manipulating higher off open, and we know that we have a prominent draw lower, and we see that ES is already starting to sell off, we know that NQ is going to follow behind, okay? So we see an SMT between these pre-market highs right here. We see a wick closing rejection, and once I saw the second candle open, wick higher and start to run lower, I went ahead and entered 10-point stop, targeting the unfilled hourly gap, okay? And this right here delivered for about 70 points, okay? So really, really clean delivery there off of the SMT that we got. Okay, now after taking profit and, closing this short, let's see why price might have wanted to trade higher here. Well, we see right here that Nasdaq came and took out this low. However, ES did not, okay? So same low right here. ES failed to come take out this low, making it the leading asset now, okay? Now that we have that, where can you actually enter? Well, we make a prominent swing higher. We then trade back lower into this gap, and then start to trade higher again. Now, what do we actually have here in this scenario? Well, we had an SMT between these two candles, okay? This candle right here made a higher high, while we see over here, ES swept this low out, okay? And as I've been saying, as soon as we get this cracking correlation and this SMT divergence, we instantly see quick delivery higher, okay? And similar thing for take profits on this day, you can take this internal swing created and you can target -2. So we called out longs right here to -2 again. And you'll see one thing I really like about this trade is the fact that we closed above this inverse gap right here while creating this bullish order block. Because we had this down close candle and then closed back above it super quickly, we know that this area here is going to hold if we even do trade into it, which in this case we didn't. We just traded straight to the draw. Now, one other thing to look at was the gap fill. So we see right here that what does the Nasdaq do? Well, it trades in to this fair value gap on the 15-minute, and it fills in the entire gap, creates its SMT, and then trades higher. Now, why are gap fills significant, and what does this actually tell us? Well, we know that fair value gaps are areas of fair value, hence the name. Now, why is that the case? Because price quickly traded through this area and didn't have time to transact between buyers and sellers fairly, okay? So what is price going to want to do when filling this imbalance? Well, it's going to want to fill each and every part of that imbalance, right? So when we only trade through half of this gap, we're not filling the entire imbalance left in this fair value gap, right? And occasionally you will see that price is, too bullish to trade lower, and we're filling enough orders in the upper quadrant of that gap to get delivery higher. But oftentimes you will see that gaps get filled in completely, which is what we saw here. And this relates a ton to SMTs because we talk about imbalance in price and, discorrelation. And this is an example of price filling an imbalance. And then we see discorrelation and then displacement higher. Okay, so now let's take a look at today's price action. So as I stated in the beginning of the video, I was obviously bearish coming into today because of this sequential daily SMT that we had formed at these highs. And you see that NQ did not take the high, so it's our leading asset to trade lower, okay? Now, when you see a daily SMT like this, it's very confident that the draw is going to be our previous day low, okay? Which is right here, and yes, we did see delivery to that low. So zooming in, coming into the day, we had market open right here at 9:30, okay? Now, initially, we didn't really get any kind of setup here. However, after a few minutes, we got a very, very prominent SMT, signifying that we wanted to trade lower, okay? So right here, I know a lot of people may have actually even taken a loss because if you trade any sort of inverse fair value gap system, right, we see that, okay, we swept this low here and we then inverse this gap right here to trade higher. Now, when entering on this, you are number one, going against your bias of us being bearish because we're delivering from discount with this SMT as talked about. We also see pre-market is, selling off very aggressively, right? So that's likely to continue. Now, when we come up with these candles, what we're doing is taking out this high and leaving this SMT right here, okay? And we see that we put in the high and ES fails to take this high. So if you are going to take inverse fair value gap entries, right, first of all, know your bias on the day. And second of all, be monitoring what both assets are doing. Because if you're looking to take this and you clearly see and anticipate that ES is failing to trade higher and we're going to make this SMT here, you understand that price is going to deliver bearish, right? And on top of that, right, we have to understand that this move right here is likely to just come take this high and we see this discorrelation, right? This isn't necessarily signifying that price is going to trade higher because there's no reason to trade higher. This inverse fair value gap was only left because price is going to come fill this imbalance. And this also ties into time frame alignment. If you're stuck on the 1 minute, you see this as a long setup. If you come down into the 2 minute and 3 minute, you see that we have imbalance above. Same thing with the 4 minute. We had a huge imbalance above. And what we're doing is we're coming to soup out these highs and trade into this imbalance to fill orders to then trade lower. Okay. So like I've been saying, after we see this discorrelation created on this 948 candle, we see instant displacement lower. Okay. 40-point candle, and it just continues. Now, there was one other good internal SMT entry today, which was this right here. So this was our 10 a.m. open candle right here. And as you'll see, there was no wick left on this, okay? So this is going to be called a devil's mark. Now, a devil's mark is essentially when you have a candle with no wick on it, right? Now, this is significant because we know for the power of 3, price likes to open and create a top wick and then distribute lower if we're going to be bearish, right? So at this instance, we had left no top wick of manipulation for this PO3 cycle, okay? So what does price do? Well, it comes back up into this range to then fill orders up here and put that top wick to trade lower. Now, what actually initiated this move to retrace price higher? And if you were in shorts, how could you have anticipated price might come back up? Well, we see right here that the Nasdaq swept out this low and ES made a higher high, okay? Now, this off of the SMT delivered for about 130 points. And after seeing we trade into this, what does price do? Well, we initially form an SMT between these highs. We then have this large rejection wick followed by displacement lower, okay? Now this is our first change in the state of delivery right here off of this order block created. Now we see price wick into this and respect it to the tick while filling in this 1 minute imbalance as we talked about, right? This imbalance gets filled in by price and we reject and then we begin to trade lower, okay? We now have this order block right here. And what can we expect? We can expect when price wicks into this order block, it's going to hold and trade lower as we clearly have draws lower and are still bearish to that previous day low as stated because of our sequential SMT. So we see this next candle, put in this high, begin to trade lower. Now this next candle right here comes up and takes this high on NQ while in this order block, okay? Now we can see right here, ES does not take this high right there, and we have an internal SMT here. Now, the key for entering off of an internal SMT is you want to wait until either the last 5 seconds of the close or just until this candle closes, because we could take the high, chop around more, and then take it on both highs, so it's not going to be valid, right? Now, this here, we wait for the close, and not only do we have this internal SMT inside of this order block and multiple other confluences telling us we want lower, but we also see that this candle closes as a doji with a higher wick to the upside, right? You guys need to start paying attention to candle anatomy because candlesticks can tell you a lot about price and you can read order flow through them, right? For example, right here, we have a large wick lower, 20-point wick lower. What do we see after? We see moving higher. We then here have a large wick high, right? We then see displacement lower afterward, okay? So when you see a candle close like this, this is extremely bearish order flow wise, okay? And after having all these confluences plus this internal SMT, you can go ahead and enter off of that close as soon as this next candle opens with your 10-point stop. And you could have targeted back to previous day low on this, which would have been 21 RR and 213 points. So yeah, we went over a lot of concepts in this video. I hope you guys had your notebook and pencil in hand taking notes. If you guys have any questions about the concepts that we've went over today, feel free to leave a comment down below, or you can add me on Discord. I will link the free Discord community down below as well as my other social media pages. But hope you guys enjoyed this one. Stay tuned for the next video.